we've already seen a whole bunch of jobs lost. Google, Salesforce, Yahoo, all the tech jobs, all these recruiting jobs for new companies, a whole bunch of layoffs. Google them, 10,000, Microsoft, 10,000, 12,000 plus people laid off at one time. Those are big job layoffs, and I think we're going to see a lot more of that, and it's going to start affecting different areas. It's scary to see for a while, 10+% inflation, what happened with the prices to the common goods that we regularly buy, and the Fed has been trying to fight it ever since. I really think they came to the game too late. They should have started out earlier. It would have gone a little bit better. People and businesses are paying more in interest right now than they have had for some time. Welcome to the channel. My name is Dennis, and today we're going to be talking about the Federal Reserve, an outlook on the economy, and why I think that it's not good. So let's waste no time. Let's get right into the content today. But before we do, if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Now, the Federal Reserve has been raising interest rates for quite some time now. People and businesses are paying more in interest right now than they have had for some time. And, really, this interest rate environment that we're in is something that, I look back, a decade plus almost, we've had this easy money time period where money was cheap to come across, readily available. We had a bull market that served because of it, a bull market that really historic bull market that lasted a long time. And man, how I miss those times, how I really enjoyed that bull market. You saw, just easy to come across money, easy to get a mortgage, easy to get a personal loan, business loan. You were paying less and less for those loans. More of it was going into the economy. You didn't necessarily see fast growth. You didn't see these, boom and bust, things that we saw in the 1800s and 1900s, things that, this country has dealt with at times. Other places have dealt with where business is just hot, booming, and then it busts. No, what we saw was just steady growth. And then inflation was around that 2%, hovering around that area, inflation where the Fed wanted it to be. But you also saw stock market growth. You saw it was just a beautiful time. I really missed it, decade plus of just easy money policy. And, we don't know how long it would have lasted. That's one thing that I always think about. You don't know how long it would have went on for. It couldn't have went on forever, but it was really COVID. It was an outside thing that changed it when the entire world shut down because of the pandemic. That kind of put a halt to that bull market, turned into the bear market, and everything else that we've been in, since then, with the higher rates, and all the things that are to come, because how this ends up playing out, from the shutdown, the inflation, the higher rates, we still have to see what those higher rates will fully bring. But, you don't know how long, those good times would have went without that outside source changing everything, that bull market that I kind of grew up in. I really enjoyed it. Now, when we went into a lockdown, everything really shut down. The world just kind of turned off. Everything just kind of, changed forever. And, a lot of things were messed up. And before we even, get into the nitty gritty of what happened financially, the biggest things is that loss of life. Losing people, what happened, the loss of life, the deaths that happened, people that lost jobs, loss of employment, loss of housing, those type of things. You could lose money, and nobody likes to lose money, but losing those type of things, traumatic life events, that's the most important thing that happened. But financially also, there were some people that ended up in really bad situations. There were people that profited from it. There were companies that made record profits. People still received promotions. There was still people that were on the up and up, or people that just held on steady. A lot of those people just sitting in the house. What did you see? online shopping, people buying everything that they could think of. And as we had a shutdown at the same time, more people buying on the internet while there's less and less being produced and out there, led to, huge price increases, led to just this really weird thing that happened because of what was happening geopolitically in the world, what was happening because of a disease that was introduced into the world, just all these different factors that led to a very unique time in human history. Now, because of that, you had this high demand, you had this low supply. It led to the inflation that we saw. It was scary to see for a while, 10+% inflation. What happened with the prices to the common goods that we regularly buy. And the Fed has been trying to fight it ever since, by raising interest rates. We saw them, I really think they came to the game too late. They should have started out earlier. It would have gone a little bit better. But then they got very aggressive. We saw those 0.5, 0.75% rate increases. It was all on the news about how it's the largest rate increase in all this time, all that type of stuff. But I really think they came really late to the game because inflation was already hot. People were, the stimulus, the money that was pumped in, people were spending. Too much time went on with high inflation. And then when they came to the fight, and even now, they're continuing to raise interest rates. I bet you in a couple weeks, they'll raise it by 0.25 or 0.5 again. They started out very late, then they got very aggressive, and, we haven't seen the full fulfillment of how everything will play out yet. But I really think that it's going to be very bad because inflation is still not completely tamed. It's still not in what I would consider to be a safe place. But you're going to keep raising rates. We've already seen a whole bunch of jobs lost. Google, Salesforce, Yahoo, all the tech jobs, all these recruiting jobs for new companies. Whole bunch of layoffs. Google them, 10,000, Microsoft, 10,000, 12,000 plus people laid off at one time. Those are big job layoffs. And I think we're going to see a lot more of that. And it's going to start affecting different areas. Right now it's tech, recruiting, it's in a pocket. But as rates continue to go up, and the borrowing that consumers and the businesses feel that continue to see that pinch, right now you still see a whole bunch of spending. But when spending starts to go down, when consumers don't have money, businesses aren't hiring, you could have this ripple effect, and it's going to affect other sectors, other types of employment. I see a negative outlook. I see this playing out very bad, a freight train crash type of situation. Now, again, not financial advice. This is just my personal opinion. But with the Federal Reserve coming late to the party, raising interest rates so late in the game after we've seen inflation for so long, and you're already starting to see job layoffs, businesses recruiting and hiring less, consumers being affected by the interest rates and having less money, I do not see this playing out well. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.